Welcome back to the Business Buzz.
It's great to be here.
Today we're diving into a topic that's been making headlines and shaking up the financial world. Cryptocurrency.
It's certainly been a wild ride lately.
It has, and we're going to break it down for you, especially what's been happening with the big three. Bitcoin, Ethereum, and Ripple.
Sounds good.
You've probably seen the news. $1 trillion market shock, values plummeting.
It's a significant event, that's for sure.
Now, some people might be thinking, well, I don't own any crypto, so why should I even care?
That's a common reaction.
But this roller coaster, this crypto roller coaster, impacts the entire financial landscape.
It's all interconnected.
And it's not just about the numbers.
Yeah.
Right? There are so many different opinions swirling around.
That's what makes it so fascinating.
Some analysts are saying crash, urging caution, while others are saying this is the perfect buying opportunity.
It's a real clash of perspectives.
It is, so let's dive in and try to make sense of it all.
Let's do it.
First up, Bitcoin, the OG of the crypto world. It's taken a major hit, plummeting below $80,000. That's a 25% drop from its recent high of almost $110,000.
Yeah, we're officially in what's called a crypto rout now, which signals widespread panic selling. Prices dropping rapidly.
Crypto route, that sounds a bit intense.
It definitely captures the current sentiment in the market.
So what's fueling this free fall? Can you break it down for us, maybe for someone who's not super familiar with all the crypto jargon?
Sure. One factor that's often talked about is Bitcoin price suppression.
Bitcoin price suppression.
It basically means that powerful players, sometimes called whales, are manipulating the market.
Wait, so someone is purposely pushing the price down?
That's the theory. It's tough to prove definitively, but it's something that's often discussed in crypto circles. Imagine a whale intentionally creating waves in a small pond. That's kind of the impact we're talking about.
Wow, that's a pretty powerful image. But why would someone want to do that? I mean, what would they gain from it?
Well, the most common theory is they're trying to buy more Bitcoin at a lower price. Kind of like stocking up during a flash sale.
Ah, so they push the price down, create panic, and then scoop up more Bitcoin for themselves when it's cheaper.
Exactly. It's a pretty cunning strategy if you can pull it off. But it's also a very controversial topic with a lot of speculation and debate.
Okay, so this price suppression is one piece of the puzzle, but you mentioned other things are also at play, things that might seem unrelated to the crypto world at first glance.
Right. The crypto market doesn't exist in a vacuum. Global events, even those that seem far removed from the digital world, can have a ripple effect.
Like what? Can you give us an example?
Sure. Take President Trump's trade wars, for instance.
Trade wars, how does that connect to crypto?
Well, they inject uncertainty into the global market, making investors nervous. And when investors get nervous, they tend to pull back from riskier assets.
And cryptocurrency is definitely seen as a riskier asset.
Absolutely. So something like a trade war can create a domino effect, leading to a decline in crypto prices.
So it's all connected, like a giant game of financial dominoes. And speaking of measuring market sentiment, you mentioned the Crypto Fear and Greed Index. It's currently at 21, the lowest point since September. Can you remind us what this index measures?
The Crypto Fear and Greed Index tracks various factors to gauge the overall sentiment in the crypto market. Things like volatility, social media chatter, search trends, market momentum, it's all taken into account.
So it's kind of like a mood ring for the crypto world.
Exactly. And right now, that mood ring is showing extreme fear, which means investors are holding back. Nobody wants to buy when they're afraid of losing money.
Makes sense. So with all this uncertainty, all this fear in the market, where do the experts think Bitcoin is headed? Is this a good time to buy or a sign of further trouble?
Well, it depends who you ask. There are definitely contrasting opinions out there.
Give us the rundown.
Ruslan Lienka from Uhodler, for example, believes Bitcoin could fall further, maybe even hitting the $70,000 mark. He sees that as a strong support zone, a price floor where buying interest might surge and prevent a deeper plunge.
Okay, so $70,000 is kind of like a safety net, at least according to this analyst.
Yeah, but he's also quick to point out that Bitcoin's fate is closely tied to the overall stock market performance. If Wall Street takes a hit, Bitcoin might follow suit.
So we need to keep an eye on both the crypto and stock markets.
It's all interconnected, remember?
Right. What about other expert predictions?
Well, Marcus Thielen from 10x Research has a different take. He's looking at specific patterns on the Bitcoin price charts, and he thinks it might bottom out in the low $70,000.
So one expert is looking at broader market trends, while the other is focusing on chart patterns.
Hmm.
It's interesting to see how they're approaching it from different angles.
It's a good reminder that there's no crystal ball in investing. There are different ways to analyze the market, and different experts will have different interpretations.
True. Now, you mentioned that Bitcoin isn't the only one feeling the heat. Ethereum and Ripple, they're also taking a hit.
Unfortunately.
Yeah. Can you give us a super quick rundown of what those cryptocurrencies are for those who might not be as familiar?
Sure. Ethereum, also known as ETH, is more than just a currency. It's a platform that allows developers to build decentralized applications, all sorts of things. Imagine a global open source computer. That's essentially what it is.
Wow, so it's like the foundation for a whole ecosystem.
Exactly. And then you have Ripple, or XRP, which focuses on facilitating international payments, particularly for financial institutions. It's all about making cross-border transactions faster and cheaper.
Okay, so they're both riding the crypto wave, but with different goals and functionalities.
Right. But unfortunately, they haven't escaped this downturn.
How about are we talking? Are they mirroring Bitcoin's plunge?
They've actually seen slightly steeper declines. Ethereum is down almost 24%, and Ripple has plummeted 21%.
Ouch, that's rough.
It is. And when we're talking about these price swings, these ups and downs, we often hear terms like support levels and resistance levels.
Yes, I was just thinking about that. Can you explain those concepts for our listeners who might be new to all this crypto lingo?
Absolutely. Think of them as invisible barriers that can influence a cryptocurrency's price. Support acts as a floor, a price level where buying interest tends to increase, preventing further decline.
So it's like a safety net.
Exactly. And then you have resistance, which acts as a ceiling, a price point where selling pressure might kick in, halting the upward momentum.
So it's kind of like a tug of war between buyers and sellers, with these levels acting as the battle lines.
That's a great way to put it. And based on the current analysis, Ethereum's key support levels are $2,125 and $1,905, while its resistance level is at $2,359.
Okay, and what about Ripple? What are the key levels to watch there?
For Ripple, we're looking at support at 1.96 cents and $1.77 and resistance at $2.72.
Got it. Those are the numbers to keep an eye on. But how can we gauge the overall sentiment for these two cryptocurrencies? Is there a way to tell if investors are feeling fearful or optimistic?
There is. We can use something called the Relative Strength Index, or RSI. It's a technical indicator that measures the speed and magnitude of recent price changes. It helps us identify overbought or oversold conditions.
Oversold, like a clearance sale.
Pretty much. And right now, both ETH and XRP are flashing oversold, which means they've been heavily sold off. This could signal a potential bounce back.
So there's a glimmer of hope for those holding ETH and XRP.
Potentially. But remember, caution is always key in the crypto world. While the RSI can be a helpful tool, it's not a guaranteed predictor of future price movements. Oversold conditions can persist for a while, and other market forces can still come into play.
Right, it's not a foolproof system.
No indicator is. But it's all about gathering information, weighing different factors, and making informed decisions.
Okay, so for our listeners who are maybe just starting to explore the world of cryptocurrency, let's take a quick dive into some of the basics. Can you give us a crash course on Bitcoin, altcoins, stablecoins, and something called Bitcoin dominance?
Sure, happy to do that. Let's start with the OG itself, Bitcoin. It's a virtual currency that operates on a decentralized network called a blockchain. Imagine blockchain as a public ledger for all transactions, making it secure and transparent. No banks or governments involved.
So it's like a digital currency operating outside the traditional financial system. Pretty revolutionary when you think about it.
It definitely was a game changer. Now, altcoins are any cryptocurrencies that aren't Bitcoin.
Ah, okay.
They often emerge as attempts to improve upon Bitcoin's features or maybe address a specific need or use case.
So Bitcoin is like the king, and the altcoins are all vying for the throne.
You could say that. Litecoin, for instance, is a good example of an early altcoin. It aimed to have faster transaction speeds than Bitcoin.
Gotcha. And what about these stablecoins? What makes them stable?
They're designed to maintain a stable price.
Which is kind of ironic, considering the whole crypto world is known for its volatility.
I know, right? But they managed to achieve stability by pegging their value to a stable asset, like the US dollar or gold. They kind of act as a bridge between the traditional financial world and the wild west of crypto.
Makes sense. So last but not least, what about Bitcoin dominance? What does that even mean?
Bitcoin dominance refers to the percentage of the total cryptocurrency market capitalization that Bitcoin holds. It basically tells you how much power and influence Bitcoin has in the crypto world.
So if Bitcoin dominance is high, it means Bitcoin is king of the hill. But if it starts to drop, that could mean investors are looking to other cryptocurrencies, right?
Exactly. It's a key metric to watch because it gives you a sense of how investor sentiment is shifting.
So it's like a barometer for the overall crypto market.
You could say that. It's all about understanding these different metrics and factors to get a better sense of what's happening in this complex and evolving world of cryptocurrency.
All right, that's a great overview. Thanks for breaking it all down for us.
My pleasure.
Wow, it's amazing how much there is to learn about cryptocurrency once you really start digging in.
It's a whole world unto itself.
It is. We've covered so much already. Bitcoin's plunge, all the different factors at play. We even touched on Ethereum and Ripple. But I have to admit, it's a lot to process.
It's true. The crypto market can feel overwhelming. There's so much going on, new technologies, new trends popping up all the time. But that's also what makes it so exciting. It's a space that's constantly evolving, full of potential.
It definitely keeps things interesting. So let's take a moment to recap what we've learned for our listeners. We have this major crypto downturn, trillions of dollars wiped out. We've got whispers of market manipulation, global events shaking things up, and that fear and greed index showing how nervous investors are right now. It's a lot. Where do we even begin to make sense of it all?
Well, the first thing to remember is that volatility is just part of the crypto market. These big swings, these ups and downs, they're kind of par for the course.
So you have to have a strong stomach if you're going to play this game.
Pretty much. But it's that same volatility that creates opportunities. Remember, we talked about those contrasting expert opinions. Some see this downturn as a chance to buy low.
While others are running for the hills.
Exactly. So how do you know who to believe? Well, it all comes down to research and understanding your own risk tolerance. It's not about blindly following one expert or another. It's about gathering information, analyzing different viewpoints, and then making your own decisions.
Decisions that align with your personal financial goals, right?
Precisely. Your goals might be very different from someone else's, and that's okay. The key is to make choices that feel right for you, based on your individual circumstances and your own comfort level with risk.
That makes sense. You mentioned research earlier. What are some of the key things our listeners should consider before making any investment decisions in the crypto space?
Well, first and foremost, never invest more than you can afford to lose. This is crucial in any type of investment, but especially in the volatile crypto market.
So don't bet the farm, basically.
Exactly. It's also important to diversify your portfolio. Don't put all your eggs in one basket, so to speak. Explore different cryptocurrencies, understand their unique features, and spread your risk.
Diversification. That's a classic investment strategy, no matter what asset class you're dealing with.
Exactly. It helps to mitigate your risk. And of course, never underestimate the power of research.
Research, research, research.
Right. Take the time to understand the fundamentals of blockchain technology. Explore different crypto projects. Really delve into the factors driving market trends. The more you know, the better equipped you'll be to navigate this space.
That's where resources like this deep dive come in handy, right? Trying to break things down in a way that's accessible and understandable.
Absolutely. We want to help people understand the world of finance, not just throw around jargon and complex concepts. But beyond the basics, are there any specific tools or strategies that can help investors make sense of all the data, all the noise out there?
Like, how do you cut through the clutter and figure out what's really going on?
Well, remember those support and resistance levels we discussed? Learning how to identify those can be really helpful for figuring out potential entry and exit points.
Ah, okay. So knowing those levels can help you decide when to buy and when to sell.
Exactly. And there are other tools as well. Technical indicators like the RSI we talked about earlier can give you insights into market sentiment and potential price movements. You can learn to read chart patterns, things like that. It's a whole skill set.
So it's about combining that fundamental analysis, understanding the technology and the market trends, with technical analysis, actually looking at the charts and the indicators.
It's a powerful combination. And one more thing, stay informed. The crypto space is constantly evolving, so continuous learning is key. Subscribe to industry newsletters, follow reliable crypto news sources, engage in online communities. There's always something new happening.
It sounds like you have to be pretty dedicated to stay on top of it all.
It definitely takes effort. But for those who are passionate about the crypto space, it can be incredibly rewarding, both intellectually and financially.
Well, we've covered a lot of ground today, from Bitcoin's crash to those more advanced concepts like altcoins, stablecoins, technical analysis. I feel like I've learned a ton. But before we wrap things up, I want to leave our listeners with one final thought-provoking question.
I'm all ears.
Okay, so we talked about those contrasting expert opinions. Some say this crypto crash is a buying opportunity. Others say brace yourselves for more trouble. What factors would you personally consider before making any investment decisions in this market? What questions would you ask yourself? What information would you seek out?
That's a great question, and it's an important one because it really gets to the heart of responsible investing. For me, I think the first thing I would do is step back from all the noise and hype, all the fear and excitement, and really assess my own financial goals and risk tolerance. What am I hoping to achieve with this investment? Am I in it for the long haul, or am I looking for quick gains? And how much volatility am I comfortable with?
So it starts with a deep dive into your own financial psychology, understanding your own motivations and comfort levels.
Absolutely. Once I've got that figured out, then I can start to look at the specific cryptocurrencies I'm considering. What problem are they trying to solve? What's the team behind the project like? Do they have a solid track record? What's the overall market sentiment? Is there real adoption happening?
So it's about looking beyond the price fluctuations
Mm.
and really evaluating the underlying fundamentals of the project itself. Like, is this thing actually going to be useful in the real world?
Exactly. And then, of course, I'd also consider the bigger picture, the macroeconomic environment. Are there any global events or trends that could impact the crypto market? How are regulations evolving? All of those things can play a role.
So it's about connecting the dots between the crypto world and the broader financial landscape. It sounds like a pretty holistic approach is needed.
It is. But, at the end of the day, I also think there's a role for intuition. You can do all the research, all the analysis, but sometimes you just get a feeling about a particular investment.
Is that gut feeling?
Exactly. And I think it's important to pay attention to that as well.
So it's a blend of head and heart, logic and intuition. It's finding that sweet spot where informed decision-making meets that inner voice of wisdom.
I love that. That's a perfect way to put it. Investing, especially in a space like crypto, it's an art as much as it's a science.
That's so true. It's about finding your own path, your own rhythm, figuring out what works for you.
Exactly. There's no one-size-fits-all approach, and that's part of what makes the crypto world so exciting. It's full of possibilities. It's constantly pushing the boundaries of what's possible.
That's such great advice. Finding that balance, trusting your gut, but also doing your research. This has been a fascinating conversation, really insightful.
I've enjoyed it too. Crypto is such a dynamic space, always something new to talk about.
To our listener, we hope you've gained some valuable knowledge today, maybe a fresh perspective on cryptocurrency, this exciting, sometimes unpredictable world. Remember, staying informed, always learning. That's key in this space.
Definitely. Don't be afraid to ask questions, challenge assumptions, get different viewpoints. The crypto community, there are so many passionate people out there ready to share their knowledge.
So whether you're already investing or just starting to explore crypto, approach it with caution, but also, like you said, that thirst for knowledge and a sense of adventure. Who knows what the future holds, right? What innovations, what opportunities are just around the corner.
That's what's so cool about it. So many possibilities, pushing boundaries, exciting times, even with the volatility and the uncertainty.
Couldn't have said it better myself. A huge thank you to our expert for guiding us through this crypto landscape, this deep dive into Bitcoin, Ethereum, Ripple, all of it.
Glad to be here. Happy investing, everyone.
And to you, our listener, stay curious, stay informed, and as always, thanks for tuning into the Business Buzz.